Hello, everybody. Welcome to a new episode of Tech Can Save Us podcast brought to you by Literal Humans. As always, I'm your host, Paul David, founder and CEO of Literal Humans. And I'm joined today by Shawn Owen, CEO of Salt Lending. And we're going to talk about unlocking the Bitcoin advantage, the future of crypto-backed lending. Welcome to the pod, Shawn.
Hey, Paul, it's great to be here. It's good to be talking with you and your audience. Thank you.
Yeah, good to have you. Where are you calling in from?
Denver, Colorado, just south.
Nice. I've always had a good time when I go to Denver. It's a very fun city.
People usually have like a conception you're heading up into the Alps or something, and then you show up and it's a little different, but it's a great city.
Yeah, it's a great city. Well, by way of introduction, I want to introduce you to our audience here. I'm very excited to have you on the show. The Chief Executive Officer of Salt Lending. Since 2016, Salt has been a pioneer in the blockchain space, offering the first platform that allows users to leverage their cryptocurrency as collateral for cash loans without having to sell their assets. Shawn is a serial entrepreneur with over 26 years of experience in business operations and a deep-seated passion for Bitcoin that dates way back to 2011, before it was cool. From his roots in the hospitality industry to building global financial technology, Shawn's been at the forefront of the digital hard money revolution. He's also co-author of an upcoming book, The Bitcoin Advantage, which aims to simplify complex financial systems for the next generation of investors. So the first question, we'd like to just have you kind of paint the picture of the landscape for our audience. So I'd love for you to, help us understand how Salt in particular has survived and evolved in what many people think is the wild west of crypto lending since 2016. That is kind of an eternity in the crypto world. Yes. So tell me how the company's core mission has evolved from the early ICO days into being a regulated lender in 2026.
Yeah, in what we call crypto years, which are kind of like dog years in some way, it feels like the markets never sleep. And so, this goes back to really early days when it was really more about the principles and the ideas of a new innovation. I've always been huge into technology. I think that there's something about what humans build in technology that benefits people in the market that is really compelling, and it's where a lot of value comes in our lives. And I think we owe a lot to kind of look towards the future and ask what it takes to make it a better tomorrow than it is today. And technology has always been kind of my leaning towards that. And so I happened to just hear about Bitcoin early, given certain circumstances coming out of the 2008 housing situation and looking at gold and other things that I wasn't familiar with at the time, quite frankly. And the technology angle of it really caught my attention. I think I got obsessed, quite frankly, for a long time. And it was more a matter of I would support this idea even if it never went anywhere, because there are some ideas that are that powerful. The principles alone would be worth supporting, even if there's no economic or monetary part to it. Just so happened to be that there's this element of money, which is probably the biggest TAM that can exist if you think about total addressable. And it has gone in the path of really being adopted. And so it's been quite the wild ride over all those years. But the idea has always been simple. And I think where we stood out was there was a real pain to solve. Watching this early on, and early on I was coming at it from the currency angle, thinking about what would this look like as a global currency that everybody could use with a fixed supply, no borders, you name it. But it's evolved in between for at the current point in time, really to be more of a collateral, more like real estate and property, digital collateral. And so there was this need to say, all these people around, it was a smaller group then than now, but it's the same principle. They have something of value they want to store and build more of. That's a whole technology in itself and a core function. They don't really want to spend it outside of needing to at some point in time, or if they want to replenish and keep earning more. So what would need to be true if we could bridge the existing financial system that's got a lot built up, I would say, and has done a lot of things right, maybe not everything, definitely some things wrong. But what if we could bridge these two together and you could get people to recognize the value that maybe didn't care about Bitcoin at all, but they did have the need for cash flow or retirement funds, or they're investing for the purpose of dividends and growth. Where was the overlap? And so that led to the idea of Salt, really from the standpoint from history. Humans have always had a long record of using salt actually as a currency around the world. Salary, the word comes from that. It preserves meats and food. And so it was kind of along the lines of saving and preserving wealth, which is our core mission, and sounded like a great name at the time. And so we've stuck with it. It was divisible and fungible and all these things that Bitcoin kind of brought to the market with these new attributes. And we've been doing that one thing ever since. And so I think we've survived mostly because we've just kept to that one principle. We've got one problem to solve and we're still at it. There's a lot still to do, but we think that the mission's still the same.
I love that. I mean, we're called Literal Humans. We think we do a good job naming ourselves. We think naming and branding is really important. And you picked quite a human, resource, salt. Like we depend on it and we live on it. Would love to dig in and talk about like the Bitcoin advantage. You got the book coming out, and you talk about it. And for someone new to the space, which many of our listeners would love for you to share like the fundamental problem that salt is trying to solve for long-term holders.
Yeah, you bet. So if the functional, practical solve that Bitcoin has brought to the market, I would argue, is that it has created a way for people to save their hard-earned energy in something that is not inflationary, that can't be controlled or changed or manipulated. It is known and fixed, and so the rules are established, and nobody can go and just change them. It takes massive amount of consensus and democracy to get to changes, which is a feature, not a bug. And so it does this one thing that gold used to do and still does, but it does it better, which is just you have a finite number that you can use as the denominator to measure things in. And as simple as that sounds, we've never had that. That's a brand new invention. We've always had currency that in some capacity was issued by people who had way more insight and control than others, that was maybe created out of the printing of debt instruments or other kinds of supporting trust that you have to have in it in order for it to function. And there's always been an impossible task to figure out how much of this is there out there and how much is there going to be. And so you don't have predictability necessarily, which causes a whole long tail of outcomes and I would say results that we all have embedded into us because we've had to have that. So it introduces this new paradigm. And so if you understand that, then the technology is not built all the way around that. That's just what Bitcoin does. And to support it, to say, well, how do you make that interact with the legacy system, meaning the one that exists today? ACHs, wires, checks, cash, they function entirely different and on totally different principles. And so the infrastructure is not compatible. These two are like alternative universes, really. They're different systems parallel. And yet there is the need to make these things interact with each other. The first cases were always like, how do you just buy and sell it correctly? But if you think about it from the other element, anything you could do at a bank, you should be able to do if it's going to be true that it will continue to grow. So we thought, you have to be able to build around that. Salt really just focuses on one layer on top of that, which is introducing cash of whatever currency it is. For us, it's mostly dollars or stable coins, which we get into. But really, it's still the same thing. So if Bitcoin's the savings account and people have it, then how do they allow themselves to get access to credit and capital like you would if it was real estate or a car or anything else for that matter? Every other type of value that humans have accounted for has method in which you could collateralize or borrow against it. Even your credit score, something that I would argue is pretty esoteric if you really look at it. It's not a hard asset for sure. And so that's all we really do is we say people are going to want to continue to build and save their value this way. And on the other side of it, people are going to want to continue to have cash and currency. And so the bridge, the infrastructure has got to be there in order to give the world the true benefit of having all those services around it. Like
Really
you'd
interesting.
expect.
Really interesting. I mean, I'd be interested in like some of the moves that y'all are making. I think a lot of people don't maybe know about or understand. You have this recently converted, 64 million of debt into Series A shares. And we work with a lot of Series A companies. That actually tends to be our sweet spot in terms of the growth strategy that we deploy and help companies execute. I'd love to hear like how specifically that move, how did you do it? How does it strengthen the company's position compared to the other lending platforms out there that frankly didn't survive the last few market cycles?
Yeah, that's a great one. So, it's a long story. We won't have time to go all the way through it, but if you compress it, basically, we had a period of time, we've had a few of these, but we had a really extreme period of time where the world kind of felt like it was, especially from the governments, not a fan of Bitcoin, not a fan of crypto, not a fan of any of it. And there were good reasons for that and there were bad reasons for that. And there was a lot that goes behind the scenes that we won't have time for, but it's very interesting. But one of the results is you kind of had to prove that you weren't guilty, just period, if you were in the space for a period of time. And a lot of companies ended up getting swept up into a combination of things. We had some banking failures, right? Traditional banking failures with several different banks that were somewhat assassinated and died pretty quickly. And we had also a huge exchange that kind of rose to prominence way too fast and ended up having a bunch of bad practices, FTX, that blew up. And that just caused this systemic issue across the entire space, which put everybody in check. And so for us, it's all, we depend heavily, if not entirely, on trust, that people have got to understand who we are, what we do, how we do it. A lot goes into that to build trust with your customers, and it can get shattered very quickly. As most people know in business, you can build for decades and lose in a day. So it's the most important thing for us to be separated and say, we are not like that, right? It may look like that at the surface, but we are not that. Proving that to most of our regulators was pretty easy. We had one particular jurisdiction that was not quite convinced. We needed to convince them furthermore that we had no issues, and so we created an innovative structure. It's happened before, but it's not the norm. The norm would be, if you're being questioned, you go into a bankruptcy process and you sort it out and you recapitalize and you find a way to kind of sort of structure it. That's good for some businesses, and I think there's a lot of protection that comes with that structure. It is not good for other types of businesses, and certain ones specifically, if they really don't have that need, they shouldn't, because it's very expensive. It's a process, and usually it has determined outcomes, although they're always different. To some degree, certain elements are going to happen that you have to follow because there's a plan for it, and it's designed a certain way. And so we had a couple of other, I would call them peers, that also kind of got swept up and had some mistakes and or were just pulled down into the undertow because of the liquidity, that filed bankruptcy. You can see pretty clearly from my perspective, especially I'd been preaching how to let the market solve these things, how to let technology solve these things from outside. And so we just decided, let's just demonstrate that and move quickly, because this is our time to shine if we do it right. We structured a way to basically do exactly what you would do to prove to anybody on the outside that you're recapitalized in record time with all of our stakeholders, in a way that kind of built a whole bunch of confidence and stakeholders that are avid fans, that were customers and investors, and circumvented that and just went ahead. And then we ended up having the kind of benefit, I would say, feel very fortunate that we helped a bunch of people out of bankruptcies in ways that we helped bring them and refinance them out of some of those situations with other customers. So it was a big win, and that's how we navigated that one.
That's amazing. And like, pulling away from the, I mean, we talked to a lot of founders who are kind of, they're involved in like this, in the VC space, and, VCs are kind of rinsing them and taking a ton of equity, and that's a whole other conversation, obviously. But the fact you're able to kind of pull away from that and create an alternative structure and help yourselves but other folks is really powerful. So kudos to you for that. And that, I want to like think about that some more and maybe have another conversation.
It's the alignment of incentives, right? Like, if you put it in a nutshell, there's a lot of work I think us humans should look at and do to take what exists, not say it's terrible, just say, suspend disbelief for a minute. What if we could build this thing from scratch, and how would we do it differently today? Is there anything we could improve upon? As an innovator and or entrepreneur, I think you have to do that all the time. But with bankruptcy specifically, I would call that one out and say, I think we could do that better. It's not the only thing. Like, we could do titles, we could do a lot of things better. But it's one that, if you look at it, the process tends to be very lengthy and costly. And anytime that's true, there's a huge opportunity if you can disrupt it.
Yeah.
Sometimes you can't, because the regulatory moat is too strong, or whatever reason the incumbent's too strong. But usually you can. It's just a matter of getting creative. And when you can save a lot of time, you save people money, you move people's lives into a better situation.
Yeah, and there's an integrity to that too. You're like actually trying to change the material circumstance for humans and for the sector,
That's
to
right.
make it better.
That's what I love about your show.
Yeah, and you're not trying to like point fingers. Like, yes, we could point fingers all day, but hey, I have a solution, and it's not finger pointy. But so to that point, let's get into your product. So obviously your platform is unique, and you're able to, in the way that you protect and provide liquidity, through digital assets. I'd love you to walk us through certain aspects of your product, if you can, your platform. You've got the stabilization feature. It's a unique tool in the market. I want to understand how it actually protects borrowers' portfolio during, kind of like a flash crash, as it were.
You bet. Yeah. So we're known mostly from our domain name, Salt Lending, that's been the longest running. We used to have a bunch of domain names. That's the one that really kind of lived on. And our core business is lending. From the perspective, that's technically true. Like, when you think about borrowers coming in looking for capital and lenders looking for investment, but it doesn't give you the full sense. So I'll kind of walk you through. We still think that the core actual mission is not debt, for sure. It's not lending. It's really building and preserving wealth in a form that fits you. No different than we've all grown up to some degree hearing about bonds and equities in the market and how you create a portfolio. It's very similar, where we've got exposure to people who are looking for the thing that is volatile and has a lot of potential upward, which would be Bitcoin in this case, or maybe longer tail, a tokenization or crypto that we could get into, but really it's just Bitcoin right now. And then you've got people who need dollar yield because they've got cash flow. They're looking to find ways to get more of it so they can start to think about retirement. And you see a spectrum that you switch over time, usually with a mix of those two things. And so those are both actually very much focused on building more wealth and gaining more yield and or protecting your value. Those are what those really are, as financial tools. But it is known for lending, and I think that part's easiest to understand when kind of bringing somebody up to speed on some of the products. So Originally, the whole idea was this is amazing. We have programmable money for the first time. It's bringing something new to the table. What if we could build on top of that, i.e., what turned into kind of smart contracts and then kind of evolved again into some names. There's a ton of different ways you could look at it. Not all of them make sense to anybody from the naming convention, right? Some of them are very techy, from like NFTs to smart contracts to DeFi. But really, the idea is still the same. So if you have something like a contract, let's say a loan in this case, it's got terms that both parties need to understand of what happens if these statements. There's a lot of if statements and terminology and language that really doesn't matter a whole lot unless something goes wrong. Otherwise, it's just setting the frame of what you're signing up for. But things change over life. And so as things change, paper usually doesn't stay very relevant. You have to come back and think about amendments and different ways to update. With technology, there's this huge potential for that to be streamlined and maybe more effective and automate automatically. So in that, the first thing you had to solve for when going to talk to the dollar side of this is like, hey, I'm this crazy guy that look at all these Bitcoiners. We love this thing. Would you lend us money? People were like, that sounds really interesting, but what if this, that, and the other, and go through all the learning curve. Biggest question we always had to answer was, well, what happens if the market drops so fast and Bitcoin or it goes to zero and dies? I don't want to lose my money. I think that you sound like a good guy and those people look great, but it's new to me. How do we de-risk that? And so we came up with original ways to kind of program in what would just sell the collateral. So if you have $1.50 for every dollar that you've borrowed, you are over collateralized. You have more money, which is the opposite from a bank, right? They do fractional reserves. So you have 1/10 of the money, right? And so it's extremely protected in that manner, but it's this new asset class. And so to get people over the hurdle, you over collateralize and you show that you can sell it into the market. There are people that will trade. That became known, I would call it, as what's liquidation. That's not necessarily what you're going after. It's definitely not the thing you're looking for if you're trying to build wealth. But it's a necessary part of a loan is that you have the rights to be able to perfect it for the lender because there's two parties in that transaction. We innovated around that saying, there's got to be more better ways to keep going. We came up with this term called stabilization, which a simple way to think about it is like an extension of time. So let's say that the market's kind of crazy. You're at a wedding or funeral or something, vacation, and you can't be bothered for whatever reason. You don't have the ability to just log in and go to your account. So you have the ability for us to pause it and say, hey, what do you want to do? We've frozen things. We use the term stabilize because it's a decent name for what is happening. It also ties to stable coins, which is something that's in our industry is kind of a known quantity, probably gets rebranded at some point. It's just a digital dollar. But it's a way for us to pause and say, you can either do this or that. You've got more time, which is something our competitors don't do. And then we innovated again off of that saying, if you want to take that to the extreme and no longer do you want to just put more money in the parking meter, you need some more time because you're having a great meeting. You just want to have a reserved parking spot, right? You just want to say, I don't want to worry about this at all. That's what we call shield or no liquidation.
Are you kind of like buying against like your future success? Like, are you like leveraging that into the?
It's more, I can't use the word technically to call it insurance. That's not,
sure.
I can't call it that.
Yeah.
So I'm saying that because somebody that will listen to this will laugh. They'll know who I'm talking about. But the reality is when you think about what is extra collateral, what's insurance, when you have a mortgage, if you missed a payment, they're not going to just liquidate your house. It's gone. It's not yours, right? There's a huge long process and there's a lot of ways to cure. And so we're always looking at ways to innovate around the cure. What are ways that you can allow for the original intent to get back on track in something that has been programmed to have a deterministic outcome?
Yeah.
That is one of the best ways to do it. So what you're really doing is you're saying, hey, if I'm going to spend the money anyway, I have my own preference. We believe in optionality. People should be the ones choosing what's best for this. I don't know what's best for you. I know that if I give you all the options and say, I don't have a particular horse that I'm betting on, I just want you to have the best optionality, you'll pick and you'll get educated and you'll have the disclosure and you'll know it. And so that's either being able to just have it sold, because that's sometimes what people need, buy more time and or just don't be bothered. Those are all different types of products for different people that are innovative outside of just the general sense of what you'd hear about it.
Stabilization looks different for everyone. Like I appreciate the humanity in that. You're like, hey, like we can and will offer enough flexibility, and that's gonna look different from person to person.
That's right.
I want to get into kind of like the loans, so you've got these loan offers with zero fees from any services, including origination and custody. And you've also allowed, borrowers, to borrow up to 70% of their asset value. So I want to understand, like, how do you maintain this low cost structure for users and also make sure that they're getting enough access to funds without putting the platform at risk? How do you do that?
Well, yeah, full disclosure, we might have to fact check some of those because I
Sure.
don't know for sure that we don't have no fees. That sounded a little too good to
Okay.
be true.
Okay.
We do believe that the market is very competitive, and the best way to serve people is to have the lowest cost. Like, we do believe that. I think that is true in every type of business models, that if you can pass along the savings to your customer, that's the best place to put it. Your shareholders will benefit, your employees will benefit if you pass along to the customer. There's a win-win-win if you do it right. And if you get out of whack, it's just, you can tell. So we do focus heavily on that. There are real fees associated. We have to put all of them up in front of people through TILAs, which is truth in lending disclosures, and all the things in 50 different states and many more jurisdictions. So we have there's a ton of rules around anything that would be lending, because typically when you use the word loan or lending, you could be talking about robocalls calling you that are predatory. You could be talking about payday loans, somebody in Vegas that's getting taken advantage of. There's a whole slew of problems that come from giving people money off of credit scores and just traditional ways. There's a lot of problems that are different for us. And I think we're very proud of kind of what that looks like in most cases, because we have no default rate when it comes to returning principal to, or the investment to the lender. That's unheard of. Why? Because it's way over collateralized, more than it probably should be. It's a pretty safe product from that standpoint. But we do focus on driving the cost down. There are real costs, and so usually it's a scale, again, depending on if somebody would like to finance it all up front, how they want to configure it. We really pride ourselves on looking for the most ways in which, if this were ever just the way banking happens, if this just fully synthesizes, which we think it will eventually, that it would feel like you have everything thought of, that there is something that can be customized for you no matter what part of life you're in and what your circumstances are. We think that's the approach. And so that does produce a lot of different offers we can give people. And I do think we give a good product for a good price. It's not free though.
Yeah. Interesting. So I want to pivot us to kind of growth strategy. That's what we do at Literal Humans. I'm interested in, we talk a lot about kind of like regulatory moats and your macro context and how that affects your ability to kind of move. We've had the Genius Act come into law, and a lot of new regulations, new tax regulations in 2026. So I'd love to hear how SALT is like kind of navigating that shift towards becoming kind of institutional grade compliance, while also keeping the kind of permissionless spirit of Bitcoin alive.
Yeah, so I'll go in reverse order. So the permissionless sense of it is really a bridge. Like, I do think at some point in the future, I don't know when, that we could see a way where finance is just absolutely done by technology, could get into AI conversations, compute conversations, and go a lot of ways. But eventually, I think we solve a lot of the problems in that, because it can be thought of in a way where it can be programmed most of the time. You could, even when they're really complicated. But we are a bridge to that. That doesn't exist today. The technology is not really there all the way within any one set that would just say it's totally decentralized, automated, there's no humans. There are still a lot of humans. And in fact, one of the things that drew me to your show is that believe that we are building technology for humans. It's not to build technology for technology. It's because we think we can better the human experience. Otherwise, we shouldn't really be doing it. If it doesn't improve the majority of human experience, it's probably not good technology. With the irony, to get on the other side of the question, is that because crypto came from an unknown emerging market, fringe, whatever you want to call it, it has been overregulated by a lot in the early days. And so it's not really the wild, wild west. The wild, wild west is what you see when people choose to not get regulated at all. And they find loopholes, like the one company I mentioned before, FTX, that blew up. They went offshore by not having a good regulatory structure for it here, by over-regulating it in the United States, where I'm from. We ended up causing the problem to be worse. I would say regulators are mostly responsible for not acting quick enough to think about this as a reality. It's not going to die. And that means just that the contrast it's for the companies like us that have been here, we've been over-regulated. So this has been a huge breath of fresh air to say, all right, it's going to kind of become more structured in a way where everybody can understand it, because you get streamlining effects when you kind of land on what the final is. Nobody likes that ambiguity of saying we don't really know. It's not good for fundraising or anything else. It's really better if everybody just knows what are the rules we're playing by, and now you can just play the game. And so I embrace all of that. I think it's one of the best outlooks right now, is that we're starting to get clarity on there is a right way to do this. This is something humans find value in. Thus, let's create the right framework for it to thrive the way it should, and integrate with the systems that exist. That's been very positive. I think that it's to be determined on how some of those shake out, because what you hear in the news isn't necessarily always the way the bill gets officially memorialized. How it gets passed eventually could be a bit different. And so we have to be vigilant. Everybody's got to that's involved has to think about is this still getting to what the intentions were? And once it's all the way out there, then you adapt pretty quickly. Some of the accounting practices and changes have already gone into effect, but some of the bigger ones, like the Genius Act, they have not yet. So optimistically, kind of cautiously optimistic, I see that we're heading in the right direction. And I
Yeah.
think there's a lot of value in that being curated and just finalized sooner than later.
Yeah, totally. I think this real estate thing is really interesting. I used to, my dad was a real estate guy growing up and used to drive around and, help him with, fixing apartments and selling houses
That's
and
where I
stuff
came
like
from
that.
too. Yeah.
Yeah,
Yeah.
I think it's such an interesting industry. But you mentioned like real estate and Bitcoin will merge in the next decade. It's quite a powerful statement. So like help me understand the strategic roadmap for moving beyond crypto collateral into kind of like these, real world assets and kind of the outlook there.
Yeah, so it's still probably collateral at that case, but if you think about just what exists today, the infrastructure with real estate, as you mentioned, and I have a lot of history with real estate as well. There's parts of it that I love, and there's parts that I think are just terribly inefficient and could be done a lot better. And if you look at Bitcoin mixed with this, they have a lot in common as far as an asset that people believe in is more of a store of value that you can build on top of, that you can do things that could generate cash flow. But they also are very different in some key ways. Specifically, one is very, very, very hyper liquid. It's got a huge market out there. Has short-term ability to liquidate immediately. And the other is not so liquid. It's actually usually very illiquid in most cases and takes quite a bit of energy to look at selling or refinancing. And so these help each other in a way. If you think about a portfolio where you want to offset, say, the duration of a very illiquid piece of real estate with something that's also collateralized, that's got more liquidity, both of them which you want to hold for the long term. Most of them are a long-term hold and or to generate cash flow. But by blending out some of that, you not only take away some of the volatility on the one, but you increase the liquidity on the other. I think it's a very good match. And we're seeing a lot of that kind of finally be considered, given that it wasn't really possible for a while for people to get their head around the right way to do that. And I think now we are in a world where that can be done. It's still a little bit of a learning curve. We're very focused on how to get that to be piloted out the right way, because there's quite a bit of interesting products that can be built around these types of combos. I'm sure there's a lot of ways to do it wrong as well. We're really just seeing a couple key ways that you could benefit real estate investors with Bitcoin, and you could benefit Bitcoin investors with real estate, and the cash flow across the two kind of creates a more financialized and or a more flexible structure, which usually is what you want when you're in business and you want to keep growing.
Yeah. So obviously we're big fans of content at Literal Humans. That's kind of how we started as a content and SEO agency, now GEO, AEO, all the stuff. You've got the new book and podcast, The Bitcoin Advantage, and that's obviously a major push into content. So let me understand how kind of this education-led marketing compares to traditional acquisition in the fintech space, and especially in a market where it seems like there's a lot of education and sort of like hand-holding that needs to happen to kind of bring people up to speed.
Yeah, it's definitely one where I believe the more you can create something that people understand, that you understand, that they resonate with, the faster you want to take that and create content so you can do it over and over and over. And I've been doing this for so long. Some of the conversations I've had with people remind me of the same thing I was saying 7, 8, 9, 10 years ago. Like I've seen some of my old talks. I'm like, I'm saying the same thing I was saying then. So in a way, it's kind of good. But in another way, it makes you really see there's still a ton of education here. There will always probably be the need to keep innovating around the content and the way that you disclose and are transparent with education, because especially in finance, you do not ever want somebody to get involved with something they don't understand. Like it's not good. There's rules around it. It's, as a principle, a bad thing. You should always know what it is you're getting involved with as much as you can. And so education is critical to that. And I think there's also a ton of benefits that don't come out on their surface. Like, for example, why do we call it the Bitcoin advantage? Well, because there's such an uphill battle to talk about a loan product in most people's minds without thinking, for the majority of people, that you're talking about debt, which is usually referring to credit cards or something else. It's not really the same as credit. And that nuance is something that's a hard curve to necessarily focus on. It also takes away from the bigger picture. The advantage of Bitcoin and what's built around it, I think, is much more core to SALT and preserving wealth and building wealth. And the ways in which you can show something on a visual or graphic are a lot more powerful sometimes. Like I found early on, I would talk to people for so long about Bitcoin, and I would start feeling like they're just not understanding what I'm saying. Am I not saying it right? And I realized, I stopped and I would say, hey, why don't I just show you? I'll just guide you through some steps. You do it on your phone, and I'd have them go open a wallet, do some things, and suddenly they'd be like, wow, like you just did that, $5. And so then it was more profoundly impactful. So I just got better at thinking through how to demonstrate. And it does come back to content. We live in an era now where I think you have to be putting out content, and you have to be good at what it is you're communicating, not only because it's going to live on forever, but if you don't, it's like nobody's going to know you're there. You could have the best product in the world, and if people don't know you're there, you're missing your potential.
Yeah.
So that's really why we're going down that avenue. And as long as it's been out, it is still a huge learning curve for people to just get to the basics of what exactly is a finite asset in this world.
And it makes sure, I'm sure you're seeing like some of the basics of like financial literacy and education that like you're helping people cross a gulf that even the traditional, system they didn't really know. And now you're trying to bring them into a new system. So that must be like, as a growth strategist, I'm like, that's a fascinating sort of user education challenge. So well done for.
Well, one more point on that too, because you probably run into this too. So technology is usually a very deep subject, right? And most things are, if you really look at them as deeply as you can take just about everything, and it's always got more you can drill into and go up in the macro even higher. With the Bitcoin financial side of it and the technology, they are very different, right? And so what I found is a lot of times people would be asking questions that are good questions from the perspective if you wanted to learn something hyper technical about mining or something esoteric, but not relevant at all if you're just trying to save some money. And so we really started realizing we need to create our own understanding that we share with people, because it is a little different. We're not trying to necessarily go out there and teach you the infinite amount of years you could spend on every topic. Other people have done that better than us and could teach you a course on some of those things that's relevant to that. If you're looking at the programming angle, if you're looking at the security angle or the encryption angle, like there's so much to it. You could spend decades, like I think I have and others have. But when it comes to just like what we're actually talking about and getting the advantage out of it from a particular way in finance, it's a lot simpler, and you can build a lot more around it, and you can kind of keep people on the right path so they don't over inundate themselves, because it can be overwhelming. It can be a lot to think about if you're looking at how much you need to learn about it.
So I'd love to dig in and talk. So you made this incredible move with the Series A sort of raise that you did, and looking ahead, thinking about both growth roadblocks and accelerators. Obviously AI. So I want to hear about how you're integrating that, but also there's all types of things like capital formation, regulatory bottlenecking, this idea of the volatility myth. What are you seeing as kind of the roadblocks, but also the accelerants of your growth strategy post that Series A raise at the moment?
Yeah, so 2026 for sure right now, I would say if you just look out in the immediate 12 months, it's a bit difficult with everything going on in technology to feel too confident about your projections if you're going 3, 4, 5 years out anymore. But I could clearly tell you what we're focused on right now and where we see the growth opportunity. We want to get the product out to the world. We want to integrate in a way where anybody that can benefit and get the advantage of it has the opportunity. And that means that we've got to get visibility. We've got to get into public markets. We've got to show what this translates to. There's an in-between the companies that are out there that are doing just the financial engineering of the securities and what we do, which is the pure actual in-between bridge. Those are going to connect, and they should, and there's a really good way to do that. We're excited about being a part of that, which brings yield opportunity and growth, wealth opportunity to the masses through the right channels and through the right structures. It also, I think, is dependent on getting across a couple other barriers, big one being jurisdictions, biggest one being language, believe it or not. So imagine trying to communicate something in one language and you're really perfecting the content, and then you need to go to another continent and everybody speaks a slightly different language. You really have to think about the right way to translate that and get people who can help you. And so between just getting into the public markets, really explaining the two sides of what this is and how they go together and everything in between, and then going to more and more countries and places where you can get properly registered and put together in a way where you can market and run a business, and then translating through the cultures. There's a lot of different ways in which that Bitcoin is, of course, global and probably already there, and people get it from that standpoint. But take that and scale a company, and there's a whole nother element to it. So that'd be like the third tier of that.
What's the most interesting thing you found, like as you were scaling Bitcoin globally? Like, what's the most interesting cultural insight you've found in terms of like, oh, in Brazil, I need to talk about it like this, like to give us that?
Well, here's a good example. It's pretty interesting. Okay, so in Africa, the use case is actually currency.
It's a big continent. Which part of Africa?
It's a huge country. Okay, so yeah, fair.
Big continent. Yeah.
With the people that I know who are mostly South Africa, but not exclusively.
Yep.
Definitely into the midsections too. There tends to be a lot of adoption as a currency, like a lot. recently here in America, we had Square, which I'm a big fan of that company, turn on Bitcoin payments for everybody. And it's a big deal. And it didn't get as much as news as it probably should have over the long haul. However, there are other countries where it's already just implemented much larger than that because there's a bigger need for it from the currency angle. Now, what's preventing that in, say, the United States? Simply the rules around capital gains and having some threshold. It's that easy of a switch, and I think you'd see it. And so that is very interesting to think about, just the overlap between mother of necessity, driving innovation where people really need it, and then what you see when you let things go with or without different types of regulation. The energy is going to go somewhere, and you want to make sure it goes to the right places. And that's why I think it's so important for people to find the right rules instead of just avoiding it, because it's going to go somewhere else and you're going to get the worst of the worst if you don't do it right. But I also think it's super interesting that culturally you could see potential. Another great example of this is El Salvador. It's legal tender, right? So small country,
Right.
booming economy, just booming economy. So much going on there that's positive. Why? Because they adopted Bitcoin that at first was kind of like, just maybe this is just like a gimmick. And they made it legal tender in a way where it's actually usable. And a ton of people have kind of built around that and gone there and bought property and started to innovate. And it's transformed in the last 5 years, like transformed. And so that's interesting because if you think about that decision versus a lot of other countries right next to El Salvador that have not seen that same growth at all, that would tell you that the use case is very dependent on what is kind of structured and allowed, not necessarily just because the technology is there, but because there's an infrastructure where people know they can use it a certain way versus can't. That's very interesting.
Yeah, 100%. Want to transition into learning a bit more about you and your experience. You've got this great background. I love people who've worked in restaurants and hospitality. I did myself. I think everyone should do it, and maybe you agree. And like you've worked in a kitchen, so I'd love to hear what are some lessons that you learned from running a kitchen that you still use in managing a global crypto company, and also like more broadly speaking, like what has a career in hard money and hospitality taught you about this like human element of tech?
Yeah, at the end of the day, the truth is it's about people. As much as sometimes we can get totally caught up in the products, I certainly do. I love thinking about technology. I love building technology. I have my whole entire life. I've always been imagining what the future could be like, whether it was video games or making your own stuff up as a kid versus, even in restaurants, I'd be cooking and working with people in a very tangible kind of brick and mortar hands-on way where a lot of times you have to actually show people what you're doing. You necessarily can't just like explain it in a video. It's certainly got technology, but I would be gravitating towards how do you structure the recipes so that they're deterministic? How do you make sure that it's always exactly the same experience, that the lighting is exact, that the music is exact, that people show up on the right time? And that is all technology. That is all this abstract. It's not humans, but it's for humans. And when you do it right, you would get this phenomenal energy where we've all had it. Everybody's had a night where you just had a wonderful meal, wonderful conversation. You could spend all the money you needed or wanted to, and it would be worth it. And it felt like everything was magic, right? And you've all probably had times where it didn't go well, or it was like, it didn't. That's not worth the money. What makes the difference there is the people, for sure. And people are the ones that ultimately have to believe in what that structure is. They got to understand what the reason is for why you show up and why do you do what you do. And hospitality is this interesting thing where it's just treating others like you'd want to be treated. It's so simple. Yet it's so profound, and it makes all the difference because you could tell when you're being treated nicely, whether it's somebody you'd never met before and it's just a random act of kindness, if they're just a nice person. You can definitely tell if you're not being treated well. And I think that translates to every business. I don't think that gets extracted. I don't think that dies with technology. I think it gets kind of masked sometimes. But, I want to believe that we're still always building for the people and that we're creating and empowering everybody to have more access because that generates more potential for more people to build and to innovate and for us to build more together that's better for everybody. And I think you do that through technology and through people, but ultimately it's for the people.
I've always been impressed by the founders. We had, Andy Elwood from Stretch. They're basically kind of like the Waze for groceries. And he actually worked at Waze before. And like, he's got this like, shopper first mentality, and he's building this platform where retailers can bid for people's grocery baskets and stuff like that, and that's going to change the game in
That's
shopping.
cool.
It's so powerful. Yeah. And he's just like he's maniacal about this shopper first mentality, and I just absolutely love it because that scales, right? He can then, he's got millions of dollars in pre-purchase intent from hundreds of thousands of shoppers, and like retailers want that, you know what I mean? So like if you ground yourself in the humans and the users, that is able to scale, and I think that's really, really interesting.
Final comment on that, because this is definitely a passion point of mine. I've found myself in businesses where I was in charge and it was all on me, and you'd be battling, say, low energy. It's not that busy. People aren't excited to be there. You find everybody in the back doing paperwork and stuff that's like not important at all to the customer. And that's when you would have the worst experience. But this is true at every business, right? And every business. And so I always just called it walk through the front door. Just go through the front door like you're the customer. Yeah. Obsess about what it's like to be the customer. Be the customer, actually. Just go as often as you can and experience it like a customer, because you're going to understand what matters so much faster when you are thinking about what would I want to be? What would I want this to look like right now? How would I want this to feel right now? And I will always live by that. I do that with anything I'm involved with. I'm going to push myself, because it's very easy to get caught up in all the other stuff, right? There's so many thousands of things that go into a business, from taxes to
distractions. They're distractions from the customer. Yeah, they are. Absolutely. Right. I mean, we have a value at Lorem is called professionally playful, and we stole it from a gaming company. And think about, like, gaming companies really give a shit about their customers. Like, they're just constantly thinking about the customer. Like, the whole thing is customer experience. Like, everything they're building, everything they're developing is customer experience, right? So like, it has to be sticky. It has to be, interesting. And so like, I'm always saying to the team, like, okay, you could present this as like a slide, but what if it's like a game? What if it's an interactive, sort of like how do we do that on a regular basis? And I think that's really interesting, because it's so easy. Just here's a slide, here's a graph, here's a table, but no, like, let's make it interactive, So, yeah.
For sure. Yeah, for sure.
So like, you've been an advocate for Bitcoin since 2011. I'd love to hear if there was like a specific aha moment that made you realize that, like, the kind of digital scarcity, was going to change your life, and that this was the thing to latch on to.
Yeah. There was a very specific point to it. And so for me, and I think this is true all the time, but it was just my exposure came from coming out of putting everything I had working as hard as I could into building real estate, and then planning to keep investing. And my hobbies were technology. Business was, I understood, but it was like investing that had my attention at that point in time. This going into 2007, put a bunch of new investments down, buy another property, and I get just hit hard with the reality that most people did in 2008, where on paper, you're so wrecked. And you're like, how could this happen in a weekend? I don't understand. Like, what's everybody freaking out about? How did this go so wrong? Right? And that made me feel kind of something I'd never felt before, which is I really believed in just the American dream, build, everything's great. My grandparents did it, their grandparents did it. We're going to just go in this direction. It's up to the right. Let's go. And that set me back and said, wait a minute, like, I clearly do not know enough about the market and the structure, because I can't quite put my finger on how this would happen. And that bothered me. And it just happened to be the overlap pretty quickly after that I was looking for, everything under the sun. I was like, I need to learn more. I want to understand. So I'm looking at hard money, gold, silver, stocks, you name it. Went on a binge to learn, because it really struck me as I don't like the feeling of feeling like I did know something, and then I was just clearly schooled. And I heard about Bitcoin early, and when I couldn't quite put my finger on it at first. It was like, wow, that's really cool if that's true. If it could be like a digital gold, or it could be something that they're scarce. It could be something. And quite frankly, I at that point had this strong opinion that we had an opaque system, that overprinting money and debt and for over engineering products that people can't understand what's actually in them was the problem in that particular crash, 2008. That's how nobody ended up seeing it coming, really. Maybe a few people. The average person didn't have transparency. Nobody knew how much this stuff was out there. It was clearly a disaster. Now, Bitcoin, on the other hand, was preaching and showing that you could look at the code yourself if you wanted to. You could audit it and see everything about it, and nobody could change it unless there was consensus. And that idea that you could have a financial system that is transparent, accessible to anybody, doesn't say yes or no and make decisions based off of what you look like or your skin color, doesn't care if it's a weekend, if you're going to be able to send a wire or not, will continue to make 2 + 2 = 4, no matter what somebody else says that's a politician, right? Like, that really just caught me, and to a point where I still believe probably the most important technology that's existed in my lifetime would be that we do that right. And if we do it wrong, it would be just a shame. And that doesn't mean that I don't think we should, I don't think it should be like an immediate thing, right? I think we should really integrate and take this idea of education and learning of how to build around it. But I don't think we should just sleep on it and let it sit. Obviously, I felt like it was a worthy cause to put myself at risk even to some degree. Like I never would have thought it would be so volatile, or that we'd have periods of time where you had to prove you're innocent. Like that was crazy to me.
It's wild.
Right. Just being an innovator.
You don't let like you like I think that's my first job out of uni was I was a middle school teacher. You don't learn in comfort. You like literally there's this concept in reading. I taught English to 8th graders. You have to teach people at their instructional level, and that's one level that's just above where they're comfortable. So there's words that they're encountering that like they have to look them up and they have to search and understand. Like you literally learn through discomfort, and I think a lot of people don't know that.
I love
like
that.
yeah, like you don't learn at your reading
The
level.
obstacles, the opportunity, the pain is the learning, right? The failure is the lesson.
Everything you want is on the other side of fear. That's your instructional level. So yeah, I really love that.
In teaching, you probably had to do that. I mean, I think that's true just in principle and around, but I can only imagine with trying to take a bunch of students at different levels and figure out how to get them constantly uncomfortable to the point where they can have the win and feel like it was worth it.
And that's the thing where I taught. I had kids on kindergarten reading level in an 8th grade classroom. I had kids on an 8th grade reading level, and like you had to really personalize. And
Very
so
much
like talk about personalizing at scale. You know what I mean? Like it's really wild. Not a lot of resources. Listen, we'll get you out of here on time. I've loved this episode, Shawn. I think it shows us that the future of finance isn't just about kind of numbers going up and to the right, as you said. It's about creating robust, transparent systems that allow people to kind of actually use their wealth without sacrificing their whole future. I think you're on the cusp of building this system that is going to benefit and already has benefited a lot of people, and it's really exciting. And yeah, I really appreciate your time and attention today.
Yeah, you too. I'm sorry I have the hard stop today. I would love to do the rapid fire. I'd come back anytime. I'm easy to get a hold of. Would love to do that. Normally, I don't have a hard stop like that, so I appreciate you honoring that. It's been great to talk to you. I think you've got an awesome thing going. I love the premise and your audience, and so be happy to come back and support and/or reach out. I'm really easy to get a hold of one way or another.
Yeah, you can tell our listeners where they can find out more about you and Salt Lending.
Salt Lending, so SALT. Lending like you were lending some money. Saltlending.com is the easiest domain. We're everywhere, and so it's pretty easy to get to any other place.
We'll include all those links in the episode description. We'll get you out of here on time. And for our audience, this has been another great episode of Tech Can't Save Us podcast by Literal Humans. As always, I'm your host, Paul David, been joined by Shawn Owen, who's the CEO of Salt Lending today. We've been talking about the Bitcoin advantage, unlocking the future of crypto-backed lending with Shawn here. Please give us a review, give us a 5-star rating so we can keep bringing amazing CEOs and founders like Shawn Owen onto the show. Thanks again.